Hello, ladies and gentlemen. Greg Mikulowski from ForexLive.com. Today's date is September 24, 2024. This is the Kickstart video where I take a look at three of the major currency pairs: the euro versus US dollar, the dollar versus yen, and sterling versus US dollar from a technical perspective. Let's get started. I'm going to take a look at the hourly chart, and if we take a look at the this yellow area right here, the yellow area is defined by a number of different swing lows and swing highs going back in time. I'll outline some of the levels through here where the price either found support or resistance within that area. We moved above it here. This is unemployment day, but then rotated down. Over here, we also used the level. This is in trading last week. We did have volatility off of the FOMC rate decision and then into Thursday and Friday as well. We did try to hold support against in this area right through here. We also found support against the 100-hour moving average. In trading yesterday, we fell below the 100-hour moving average, breaking below the 200-hour moving average in this swing area down here. You can see its importance there before rotating back to the upside and back into the swing area, back up by the 100-bar moving average. On the way back to the downside and trading here yesterday and into today, we did find again support here before rotating back to the upside. And today we moved up to the high of that swing area and found resistance sellers against the level. The 100-hour moving average is right in between this swing area right through here. And as you can see, the current price at 1.113636 is currently within that swing area between 1.1131 and 1.11454. At some point, today, next few minutes, I don't know, we're either going to try to break to the upside, I would guess, or move back to the downside, I would guess. On the downside, we do have the 200-hour moving average that we need to get to and through. That's this green line right here. If we get below that level, then we start to look toward this swing area down here, which was a floor through here. You can see the floor being developed right here. Became a ceiling through here. Became a floor again here. Volatility from employment. A ceiling here before breaking to the upside. Volatility from the FOMC rate decision and other stuff going on here. In trading yesterday, as I mentioned, we did fall below that level, opening the door for further downside, but then snap back to the upside, now back down to that level right through here. So that's going to be key on the downside. On top, so get above the 45 level and opens the door for further upside momentum. We'll look toward this swing area up here, which was a high price from last week's trading, ahead of the double top up here, and found willing sellers against that. I thought maybe this high right here would do something over here, but it didn't do. We moved above it, moved above it, moved above it, moved above it, above it. But nevertheless, break above the 45 level and stay above that level opens the door for further upside momentum. Let's next take a look at the dollar versus yen next. And we look at this chart, the 58 level. I have a solid red line right here, which reminds me that must be something important on the daily chart. So I'm going to go to the daily chart. Take a look at the 144.58 level. And if we go back to this period right here, beginning of January 2023, to the high price that we saw in July 2024, this whole trend moved to the upside with lots of ups and downs, of course, along the way. But certainly it's within this parallel channel right through here before we rotated back, sharply to the downside. We moved back to the 50% of that at 144.58 and actually moved a little bit above it in trading here today. You could see that on the hourly chart. We moved just a little bit above that level after using that level as resistance both here and here and here over the last few days of trading. So buyers got the courage to break it above that 58 level, but only to be rejected, and the price rotated back down toward this swing area through here, where we had again a number of different swing lows and swing highs going back in time. It got a little squirrely, of course, at different times because of different economic events. But and in trading yesterday, the price, similar to what we saw in the euro, it did misbehave, moved below the low end of that swing area. Also, the 50% retracement, by the way, of this move to the downside. So we should have seen further selling right here and here. And it was, we did, but it was very brief. And the market then reestablished support against that 50% and 38 level. Below the swing area right through here before moving to the upside and go and test this 58 level up here. So we have a battle going on between 50%. Maybe we can add the 100-hour moving average here at 25, which is moving closer to that 50%, closer to that 38 level. And resistance up here at the 58 level up from the 50% from the daily chart. recall that level as a topside resistance. And we're in between that area right now, testing the high of the swing area. Finally, let's take a look at the sterling versus US dollar. And this pair continues its trend to the upside and trading yesterday. We saw a volatile move to the downside here. But what did we do? We found support right against the 100-hour moving average. That was good news for the buyers, and the buyers took advantage of it, pushing the price back up. Now, coincidentally or not, coincidentally, the 58 level is also a solid red line here, which reminds me to go to my daily chart. And when I look at the 58 level up here, I have to go all the way back to this period right here between 2021 and 2022, where the price traded below this yellow area and then above it and then back below it and then came up to that area right through here before moving to the downside right here. And the high of this swing area right through here came in at the 58 level, 33.58. So that was another 58 level of importance in trading here yesterday and today and this week. And what we saw was the price move up to that 58 level yesterday, back off a little bit to the high price right here. This is Friday's high, and then just inched along here with 58 and 38 being the support and resistance. And then we tried to go above it and failed. And then we tried to go below it and failed. And then we moved above it. And note here, this little nuance here that the low price off of the high came right back down to the 58 level. So the 58 level is trying to hold support. We'll see if it can hold support. If it can, that would be the best case scenario for the buyers. And we need to get above the triple high up here, I guess, up here at the 82 level to increase the bullish buyers. Right now, the buyers are like, I think we can. Whether they can or not depends upon that 58 level in the short term, at least. And we'll see if the price can hold that level. If it can, then getting above the 82 level and pushing higher seems to be the way to go in the pound versus US dollars. It continues its bullish bias again after bouncing off the 100-hour moving average yesterday. So there you have it, a look at 3 of the major currency pairs. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.